Move on to markets. Let's take some closing numbers from yesterday. The BRVM market closed up yesterday, while the Ghanaian market was down marginally. Meanwhile, here in Nigeria, the profit-taking spree continued. The all-share index lost 0.71%, closing down at 37,286 points. Meanwhile, the slowdown in Nigeria's consumer economy in the last few months has been a challenge for companies in the fast-moving consumer goods sector. However, quite a number of these companies are re-strategizing and focusing on expanding capacity and investing in marketing and distribution channels, encouraged by a growing population with a vibrant middle class. Now, for more on the Nigerian consumer space, I'm now being joined by Esile Aigbe. He's analyst CIB research at Stanbic IBTC Bank. Thank you so much, Esile, for joining us.
Good morning, Esther. It's a pleasure to be here on the program.
The market received a number of earnings yesterday. Now, 3 of them came from the consumer goods sectors. I'm looking at the numbers from Dangote Sugar, PZ, and Nestle. Well, it would seem that the numbers are good, but some analysts might argue that they're not great. But just looking at the numbers, run us through what we should be reading in these numbers.
I think in the context of the challenging trading environment, these are pretty good numbers, particularly from Nestle and Dangote Sugar. Dangote Sugar and Nestle benefited tremendously from very strong volumes. Nestle, by estimate, did about probably 7% year-on-year growth in the second quarter, and with respect to Dangote, they probably did somewhere north of about 20% in sugar volumes. And with respect to your comment on some analysts on sort of the levels of growth we're seeing, it's mainly reflective of the softer consumer economy that Nigeria is in following the partial or the increase in gasoline prices last year. Quite normal. I think if you put that in perspective with what's going on in other markets, even a lot of the strong emerging markets, Nigeria is doing particularly well, and it's the reason why a lot of investors still support the market. It is one of the best performing markets from a global standpoint.
Now, Esile, are we going to see an improvement in the consumer sector as regards consumer spending as it were? We know that consumers, of course, have to reprioritize what they spend on in the consumer goods as far as consumer goods are concerned. But do you think we might see an improvement in the remaining half of the year, and perhaps how that could impact on earnings for these companies?
I think there's a slight chance that we see an improvement in the fourth quarter because, we've obviously been through the cycle for the last roughly 18 months. And I think that with, the consumers basically starting to unwind, because at the end of the day, it's a confidence issue, because my view is that the increase in gasoline obviously impacted disposable income, but it wasn't because of that impact that you're seeing a softening in spending. I think it had more to do with confidence, especially when they were expecting a complete removal of subsidies on gasoline. So I think you generally find them in a savings mode, and obviously it's the reason why non-discretionary products seem to be doing a lot better than discretionary products. But in any case, I think that the risk to that is the full removal of subsidies on gasoline. We don't know what the timing of that yet, but in-house, we do think it will happen somewhere post-election period.
Now let's quickly talk about Dangote Sugar. A lot happening for this company. They have a new group managing director. They're positioning well ahead of the federal government's policy on raw sugar. Now going forward, your outlook for Dangote Sugar in terms of earnings growth and what investor sentiments could be going forward?
With respect to the announcement of the new CEO, I think that was particularly positive for the company and adds a lot more credibility to the upstream project, which is basically, integrating up to the sugar mills. The man comes, Mr. Graham Clark, comes with a lot of experience in the sugar industry in Africa, having worked in a number of sugar companies, most recently in Ilovo, where he was group CEO. So I think that we're likely to see a more aggressive strategy on the upstream front. Which is a business where Dangote Sugar hadn't really had strength. They acquired Savannah Sugar last year, sister company, that has very little capacity, equivalent sugar, refined sugar of about 50,000 tons. They're looking to scale that up to about 250. Given the appointment of the new MD, it wouldn't surprise me if that's likely to do a lot more. In the context of the refining business, I think that that's relatively challenging given the excess of sugar refining capacity in the industry. At the end of the day, it boils down to the price of the product. Sugar is a fungible commodity, and I think a lot of the players will basically have to struggle for market share. And it's the reason why we've had a pretty weak outlook for the company in the past. But I think it's definitely looking a lot more interesting with Mr. Graham Clark coming on board, and the possibility that the backward integration will be a lot more robust than initially thought.